Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Thursday, May 5th. Well, the focus today during European time is squarely on the UK. First is the Halifax House Price Index for the UK. The market reaction to this indicator isn't that consistent. Cable sometimes rises when it misses estimates and falls when it beats, so I wouldn't suggest trying to trade it. After that come the UK Services and Composite PMI. Now, the UK PMIs the Purchasing Managers Indices have been quite disappointing so far. Tuesday's manufacturing PMI was well below estimates. It was expected to rise slightly, but in fact it not only fell, but fell below the boom or bust line of 50. While Wednesday's construction PMI was expected to be stable, but instead it fell. Now, today's Services PMI is expected to be slightly lower, while the Composite PMI is expected to fall even more. It's possible, though, that we get another negative surprise and sterling weakens further as a result. Finally, during the day, there will be local elections throughout Britain, including votes for the Scottish Parliament and the London Mayor, as well as local councils throughout England. 1 year after the last general election, we'll get some insight into the current support for the major parties. However, the elections aren't likely to shed much light on how the country will vote on the EU referendum in June, because Brexit is unlikely to be the deciding factor for voters in local elections. Now, there are no major data out from the US aside from the weekly unemployment claims. 4 regional Fed presidents speak, although 2 of them, San Francisco Fed President Williams and Atlanta Fed President Lockhart, have already spoken recently, and so their comments probably won't contain any surprises. That leaves Mr. Bullard and Mr. Kaplan as the key ones to focus on today. Then, overnight, we're going to get the Reserve Bank of Australia's statement on monetary policy. In this quarterly update of forecasts, the RBA is likely to cut its inflation forecast because lower than expected inflation was the reason they gave for cutting rates on Tuesday. The growth forecast will also be important. They said on Tuesday that, quote, GDP growth picked up over 2015, end quote, and that, quote, indications are that growth is continuing in 2016, though probably at a more moderate pace, unquote. Now, they could choose to keep the growth forecast unchanged, which would be positive for the Australian dollar. If, on the other hand, they lower the growth forecast, then they'll probably have to take a more aggressive easing stance. In that case, I'd expect the risk of another rate cut to rise and for the Australian dollar to weaken accordingly. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.